Hello and welcome back to our weekly market recap. I'm with Rich.
Hello, everyone.
And I'm Knight. Let's get to it. This past week, we saw the market up again around 3%, which brings us year to date down 6.5%, down from the highs in February, 10.1%, but up from the lows in March, 36.1%. The two main factors, again, this week that were moving the market was new vaccines coming to the market for the coronavirus and the Hong Kong, China trade war tension between the U.S. So, Rich, do you want to speak
Yes,
about
another company came out with positive trials on vaccine. So we have more than one vaccine that will possibly help with the coronavirus. More territories now are opening up in countries, so that's also good, as well as states. And on the Hong Kong front, the important news is that the tension was minimized or reduced a little bit recently as the United States earlier in the week found that Hong Kong and reported that Hong Kong was no longer met the requirements as a free trade city, and that China was in violation of its pact from 1997. And as a result, trade tensions increased. Today, President Trump indicated that those tensions would be minimized. So that was very good news for the market.
Yeah, it led to a rally at the end of the trading session on Friday. So all the indices actually ended up in the green after being down earlier in the day. Yeah, the next thing that we want to speak about was, so for year to date, the stock market is down 6.5%, which means that in the stock market, the leading indicator, we have seen close to a V-shaped recovery. The market is again down only 6.5%. And what does that kind of mean for the economy? Now, a lot of us aren't really feeling the relief. We're still in the midst of the coronavirus shutdown. We're slowly getting normalized, but the stock market is pricing itself in a way that it sees an optimistic future with the coronavirus, potentially early vaccines. And so just because the economy is not seeing the V-shaped recovery, and a lot of economists believe that if anything, we're going to see a U-shaped recovery. So how long that, bottoming out lasts for is curious, but in the stock market itself, we're close to almost being, even on the year.
Yes, and we saw something very similar in 2009 when the stock market reached its low in March and then began to increase. And we really didn't have a feel to the economy until late 2010, 2011, that things were actually turning around. So having the stock market going up and rallying, as Knight had mentioned on the S&P, better than 36% from the low, is not unusual when we still see the U.S. economy showing another 2 million people applying for unemployment, but even those numbers are much less than they were the week before and the week before that. So as we are looking, there is improvement in the economy, and the stock market seems to be indicating that that improvement will continue.
Yeah, and we definitely see, I think, something of the pumped up demand of people really wanting to get back in, consumers, buying, engaging in the economy. I think we've started to see that with the different areas that are opening up, and even Disney saying that they plan on opening up their parks in July. That they say that they'll be at 50% capacity, but even that is pretty big news to see the economy starting up again. And I think that's, again, why we're seeing this rally in the stock market.
Absolutely.
Now to end our week, together. We want to end it the same way that we always do. Your money is here to support you. We're here to support you. Again, during this trying time, we're still right in the midst of all the craze and the panic with the coronavirus. If you need any support, if your life has been changed or uprooted, please reach out to us. We can help navigate this time with you. So thank you. Have a great rest of your evening.